Now we're looking at the state of the economy through the lens of the gross domestic report for the third quarter of this year, which was released by the National Bureau of Statistics. Nigeria's non-oil sector grew by 5.44% in real terms, contributing about 92.51% to the nation's economy. The rise in the non-oil sector is largely driven mainly by the growth recorded in key sectors such as trade, information and communication, that's the telecommunication sector, financial and insurance sectors, manufacturing, covering food, beverage and tobacco, agriculture, looking at crop production, as well as transportation and storage. With the level of growth experienced in the sector, analysts are of the view that the government needs to deepen its diversification agenda and drive more investment in the sectors through the support of micro, small and medium-scale enterprises to grow so that the country's GDP growth would be much more sustained. Well, to discuss this and much more, I have joining me now virtually Fiscal Policy Partner and Africa Tax Leader of PriceWaterhouseCoopers, Taiwo Oyedele. Many thanks for joining us on the show this afternoon.
It's my pleasure. Thank you for having me.
Now, before we go into the breakdown of the performance of the non-oil sector in the Nigerian economy, according to the last report we've had, looking at the third quarter of this year, let's look at the overall size of the GDP growth rate which we recorded. It's a smaller margin compared to the 5.01% we recorded in the second quarter of this year. Were you expecting this smaller level of growth? Some say, well, government has continuously said it's consolidating in efforts to ensure that we have bigger GDP growth rates. Hence, we were expecting a bigger level, say maybe 5.15 or something within that realm. And others also saying, well, doing a comparative analysis of what we saw perform last year, say the third quarter of last year versus this year, Nigeria is on a steady growth path. Let's tally these two sides of the coin, which paint the reality of what we have today. Your thoughts?
Yeah, thank you very much. I think maybe the starting point is to try and look at the base effects. The result we have now is for Q3, and it shows about 4% growth rate. If you look at the same period last year, we had a contraction of 3.6%. So if you then compare that with Q2, we had Q2 of last year somewhere around 6% contraction. So I don't think that if you take out the base effect, it doesn't mean that Q2 of 2021 was actually better than Q3. It's just a question of how much impact does the base effect have on this GDP growth rate. But I think overall, if you think about it from the angle of the fact that we were in a recession and we're still recovering, then this recovery is not significant enough to make a dent that people will begin to notice that the economy is growing. Overall, this growth, while it's good because we are sustaining our recovery, I'll say it is not good enough in the sense that it is not sufficient to be able to bring back particularly inclusive development that will make employment rate better, because we still have unemployment rate very high. Inflation, even though is moderating, is still also very high. Overall, what this means is that people are beginning to experience, the mystery index is getting worse. So this would be my initial take on this.
And I would also like to take you on as well, just with those last statements, talking about the fact that we have unemployment rates still at double digits, quite high. We have inflation rate. The overall inflation rate is also high, double digits. Food inflation rate still remains at a worrying state. You look at the population growth rate, we're yet to have another population census to really give us a clear picture. That is also growing at a faster rate than we are having our GDP grow. To what extent would you also say we have to match up these figures to the GDP growth rate? Because at the end of the day, if we're still recording smaller margins of growth and not necessarily meeting these indices here, then we have a problem at hand, irrespective of the positive trend we'll have in the market, wouldn't you say?
Yes, I think that's a very fundamental point that if our population rate is growing faster than our real GDP growth rate, we're simply creating more poverty, which means every day more Nigerians are poorer than they were in the previous day. So the federal government has an objective to lift 100 million people out of poverty in 10 years, and that promise was made about 2 years ago. So, which means if you look back in the past 2 years, I do not think that we have lifted people out in terms of net numbers. I think we have more people got into poverty than any number of people that may have been lifted. So, which means that fundamental objective of government actually needs a revisit, and it requires that government needs to be very honest to tell us to say in the past 2 years, here are the number of people we've lifted out of poverty, and this is what we did. And we have unfortunately more people in poverty, and here is what we plan to do. I think that is very fundamental. The other issue that we need to pay attention to is that, while looking at these GDP numbers for Q3, and we said that we grew by about 4%. If you disaggregate it, you will see that the oil sector has not grown, is still contracting. And in fact, I would say the oil sector is in a depression state because it's now is about the 6 consecutive quarters of negative growth in the oil sector, while one sector seems to be at least holding its head above waters. The reality is that the Nigerian economy depends significantly on the oil sector, particularly in terms of the foreign reserve, the ability of the government to defend naira against foreign currency, and then the knock-on effect of imported inflation, among other things, including the ability to even procure raw materials by the manufacturing sector. So all of these mean that we have to pay attention to both the oil sector and the non-oil sector. If you look at it today, the price of crude oil per barrel is better than what it was last year. The foreign exchange reserve, our foreign reserve is more than it was last year. Yet we still have uncertainty and scarcity and a lot of issues with the foreign exchange market. And I'll say what is really missing is the investors' confidence. Unfortunately, also the volume of our daily volume production of crude oil has been challenged significantly. Even with the OPEC quota, we have not been able to meet our quota to be able to supply. And the recent issue about blowing up of pipe, I think of Ajib, also caused for a lot of concern. Hopefully, this is not the resumption of hostility in the Niger Delta.
Mr. Oyedele, I also like the assumption you've also created here, which paints a clear picture of what's going on in the economy. But it's really time to smell the coffee, if we want to call a spade, in terms of the fact that we have to gradually shift or milk better our fixation on oil. Now, we have to use, this remains our major foreign exchange earner for the country. Hence, we also have to look at much more strategic means in ensuring that we have the oil and gas sector properly positioned to fuel these other sectors of the economy that contribute in much more in terms of our GDP growth rate. Looking at infrastructure, looking at the area of value addition, to what extent do you see us also beginning to change the narrative or government responding better towards sectors like agriculture, manufacturing, the services sector, financial insurance sectors, communication, telecommunication, and much more? The narrative has still remained the same. There is no new, unique approach to ensure that we have a bigger spur in how well these sectors are doing.
Yes, you're right. I think every sector of the economy is important. When you are in a situation where there is unemployment, there's inflation, there's poverty across the land, every sector of the economy becomes very important. But of course, you have to then prioritize in terms of where you deploy your resources. What you don't have to prioritize is the policy intervention. There's no limit to the extent to which government can introduce policy intervention that cut across all sectors. We're not limited by capacity to do that. We may be limited by capacity to spend money, which is why I do think, and I say often, that the biggest impact government would make is not going to come from the money they will spend because they have limited scope. It will come from the policy interventions that stimulate and create the right environment for the private sector to drive the economy. So the plan that government has introduced now until 2025 is showing over 300 trillion that is required, and the bulk of that is expected to come from the private sector. And the question is, where would the private sector be able to mobilize those funds if you don't provide the right environment? If you think about the capital market today, it's almost impossible to raise funds. If you want to borrow from the financial market, the rates are very high. So I think on one hand, government has to be very intentional in using the oil sector to diversify the economy. Even the oil sector itself requires diversification. We have the Petroleum Industry Act that was enacted into law, but we haven't seen a lot of interest from the investing community due to a combination of factors. One is the fact that the world seems to be moving away from fossil fuel. The other part is also that government still has to deal with issues like subsidy that is creating distortion in that sector. And infrastructure is not something we do overnight. It will take time. My point is always that government has to make sure that any infrastructure that is commercially viable should be left to the private sector. Just create the framework and let the private sector provide those infrastructure. For those that are not commercially viable, government then has to prioritize based on what, for every 1 naira that we spend, where do we get the biggest impact from in terms of impacting the lives of people positively, whether they are in villages, whether they are in cities, or whether anywhere they might be. So I think we have to be very deliberate in how we introduce these policies and interventions in a coordinated manner. Otherwise, it seems like we're having more efforts and more activities than impact and outcome.
And looking at our impact and outcome index, we also have to look at the need to strategically position ourselves. But within the realm of policy somersault, you made mention of there is no limit to which government can take on policies just to ensure that we have incentives, we have stimulus to boost the markets, be it whatever sector. But at the end of the day, there's this noise of policy somersault. The perceived notion, government in certain instances has spoken through both sides of the mouth, hence this stifles the market. This does not necessarily show clarity of purpose or an economic agenda that's sound enough to sustain or be sustainable.
Yes, the reality is that you have individuals, you have businesses, you have institutions, and they are having to deal with local government, state government, federal government, and at each of these levels of government, they have to deal with different agencies. At the center, you have to deal with the monetary authority, the fiscal authorities, and then you have issues to do with trade policies. So when you run into trouble trying to just do your legitimate business, I don't think anybody cares about whether it's coming from one agency of government or one level of government. You just know that you're doing business in Nigeria and things are difficult. This is why it's extremely important that we are coordinated and we are organized in the way we introduce interventions. I think the most obvious one that everybody talks about is the coordination between the monetary and the fiscal authorities. So, and you see many times we introduce, policies before we start thinking about the impact of those policies. And then we roll them back when we think they are not working. And this again impacts negatively on investors' confidence. So as of today, you have trillions and trillions of dollars around the world, investable funds, either yielding 0% or negative returns, but they're not coming to Nigeria. Why? It's not because the return rate in Nigeria is not good enough. It is because the risk-adjusted returns that we give in Nigeria is not sufficient to attract those kind of capital. So you need to be deliberate in de-risking Nigeria so that investment can come in, not only from outside, but also from within Nigeria itself, so that we can have our small businesses, our medium-sized businesses, our large enterprises investing heavily in Nigeria. We cannot address unemployment. We cannot address fragile and slow economic growth without investment. Nigeria needs investment and more investments to come.
So, Oyedele, we are wrapping up our conversation now. Let's look at the fact that government is unrelenting or is not shifting its ground and stating that we don't necessarily have a debt crisis at hand. Some believe that the growing debt is a bigger burden on the economy, which wouldn't allow us to be able to meet up these targets we have or prospects we have on paper and then translate it to reality. At the end of the day, how do you see our borrowing trend going, and what would be the biggest mistake of government that would likely stifle our GDP growth rate with regards to necessary borrowings?
Yeah, so I think on one hand, that's debate between whether we have a debt crisis or a revenue crisis. I always say it's the difference between six and half a dozen. I think it's the same thing, because if you have enough revenue, you wouldn't borrow. So you're borrowing because you don't have enough revenue. You can say it's a revenue problem, right? But the fact also is that if you have a GDP, it's like having a piece of farmland. You're supposed to produce a certain quantity of produce, maybe it's yam tubers, but you're not producing it. And then you keep producing, said, well, my neighbors have the same size of a piece of land, and they're producing so much more than I'm producing, so they can afford to have a family of 10. Maybe I should also have a family of 10. I think that size of GDP, to the extent that it's not productive enough to give us tax revenue, we should stop referencing it. I think that would be, in my view, one of the biggest mistakes is to keep borrowing on the basis that debt to GDP ratio is still low. We have to put it in context. There are countries where they have more than 100% of debt to GDP ratio, but their cost of servicing debt to revenue is not even up to 10%. We are not even at 40% yet. We're already spending close to 80% of our revenue to service debt. One mistake that government can keep making is to think that they can fix Nigeria's problem using government resources. That will not happen. We need to create the right environment for the private sector to drive the economy. That is how we'll be able to generate revenue. That's why we'll be able to stimulate the economy, reduce borrowing. Think about it. Imagine if NNPC today were to be a private sector company that is not controlled by government, like what NLNG is doing. Imagine the type of billions of dollars in returns and in profits that Nigeria will be making, and therefore we won't have to borrow as much. And government has to ensure that also the priority whenever they have to borrow. I do admit that in the immediate term, government has almost no choice but to borrow. But make sure that your borrowing is for priority projects that will finance itself and generate more returns. Not borrowing for refineries that haven't worked in many years. Not borrowing for NTA. And not borrowing for mosquito nets or whatever those things might be. Let it be that we are borrowing for projects that are self-financing. Otherwise, we're going to get into a debt trap sooner or later, and I hope not.
Let's now wrap up. At this point in time, let's play pundit. What's your forecast for the fourth quarter of this year? Do you still see a smaller margin of growth, or you think we'll bounce back beyond this 4% GDP growth rate for the last quarter of the year?
No, I think the last quarter of the year is almost always driven by the festivities, which means you have more spending. Nigerians in the diaspora will send more money home for their people to try and get one or two things together. So usually you expect Q4, the end of the year, to be a more moderate or improved growth. You remember that last year, that was the quarter in which we got out of recession, surprisingly, because we were not even expecting it, even though it was very small. I think it was 0.11%. So I'm expecting that the next quarter, which is this last quarter of the year, will be an improvement over Q3, such that overall for this year we should be in the region of 2+% growth in real terms.
Thank you very much for your time on the show today. It's been a pleasure speaking with you, Taiwo Oyedele.
Thank you for having me.